Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Lunchauskas. Today is the 18th of October, 2023. So, welcome, everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a view of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations. Excuse me. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear here for the moment, and I'll be back in a bit. Okay, so now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, you can reach out to us. Don't feel free, honestly, feel free. We're not gonna bite, maybe just a little bit, but no, I'm kidding, of course. No, look, if you have any questions, you can always reach out to us. We'll try to help you as much as we can, and yeah, we'll go from there. Look, guys, let's jump into the charts. The first one I want to pick up here is Nikkei 225. Not much excitement. I'm not going to spend too much time on this one, basically, but yeah, at the moment, why is this happening? Something is wrong here, guys. Honestly. Okay, let's see how this is gonna go further. But anyway, the reason why I'm saying is like that that something is not working today very well. I mean, apologies for that straight away. There are a few issues, if I'm not mistaken, some technical issues, but okay, what can I do? Look, for now, I'll try to go with. I think for now it's all fine, but apologies if something starts being a little bit weird or something like that, because like I said, I'm struggling this whole morning. But okay, I think somebody else is logged into this platform because we kind of we with the whole team share. We are using this this one here, so sharing is caring, of course. Look, candles, hello, good morning to you too. So Nikkei 225, yeah, there we go, some ads are popping up. The ads should not be. High low flux 23, hello to you too. Hello. Look, at the moment with Nikkei, the situation is this, that so far there is still potential for some upside because we're still trading above the 100-day EMA right here, and yes, looking at the picture here, I mean, looking at the picture here, we can see that we're still trading above my 100-day EMA. I can see that somebody has been meddling with my chart because I'm missing an EMA. Where is that? What's happening here? What is going on? Why is it not showing? Study error, the maximum number of studies per chart has been reached. Okay, right. Okay, I think something is happening. I think somebody did not pay the bill. Right. Okay. Well, guys, apologies for this session like this today. Unfortunately, I'll have to go through this, but yeah. Looking at the picture here for now, what can I see here is that we have ourselves a Candle Z. Yes, weren't you? No, I think it's in our internal. Somebody missed out on something, so I'll have to get to the bottom of this at the end of this video. But okay, that's later, problem for later. Let's go, one problem at a time. At the moment, the problem is Nikkei. So we have ourselves a like I said, an index which is still trading above the 100-day EMA, which is great, and there is potential for some further upside. Well, at the moment, I think that this is what I'm going to be leaning for, or leaning at, whatever you want to say, how you want to say it. But yes, if you're looking for some lower levels, I think at this point maybe a drop below this little territory right here, this 31,583 is required, is needed, and then we could consider maybe a move lower. But at this point, yes, at this point I'm leaning a little bit more towards the upside as long as we remain above the 100-day EMA. China 50, so yes, some positivity initially. There was some positivity. Look, in general, China released some good numbers today. This morning, we did get the Chinese GDP figures, the Q-on-Q and year-on-year. So yeah, basically both of them came out better than the forecast. We had the unemployment number, which came out lower, which is good. Industrial production improved. So basically, in general, all numbers are kind of good. So, okay, look, we saw some positivity kicking in, but I think that the market is very worried still. I mean, yes, there was like an influx of positivity, great, but in general, the market is a little bit on the stress side right now, stressing a little bit because of, I'm talking about Chinese market, because of the whole housing issue in there. And yes, I think that the downside scenario here is still possible. From the technical perspective, as long as we remain below the 12,200 zone, yes, I will continue targeting the downside. Jumping into ASX 200. So yes, we saw a bit of a recovery. That's great. That's wonderful. Look, at the moment, I would say I'm still kind of cautiously aiming to the upside, but look, in order for me to get even more comfortable with higher levels, or at least, should I say, a larger correction to the upside, because don't forget that we're still below this downside line drawn from the high of the 27th of September. So in order for me to get a little bit more excited with the upside, probably a push somewhere above this territory would be required, above that 7,150 zone, or this, or these EMAs together with the well, actually the same 7,150. So basically that's my upside scenario. For the downside, I need to see a drop below this hurdle. I get it, it's a lot, but in general, yes, I need to drop below the 7,017 territory, and then we could take it from there. Dow Jones Industrial Average. Look, yesterday it was quite a pain in the bottom day. To be honest, it kind of did drift lower initially, then higher, but to be honest, I think that everything was in line with the expectation. So Dow remained flat yesterday, but I think that I told you that look, don't be surprised if Tuesday is going to be a little bit on the boring side, because there's there were some data coming out from the US. There was some data coming out from the US, like business inventories. We got the retail sales, yeah, and that was enough to make the big moves, make the big wicks here, the big tails. But it's still at the end of the day, it kind of moved back down, and it stayed flat. So I think that we will be keeping a close eye on the housing numbers today in the US, but probably the more important data, I think, is coming out on Thursday. We have the initial and continuous jobless claims together with the existing home sales, and the Philly Fed numbers are coming out. And we also have Mr. Powell. Where is he? I've lost him. There we go. Yes. So he's also speaking on Thursday. So basically, don't be surprised again if today is going to be like somewhere like yesterday, somewhere like flat, and then on Thursday we'll get like some sort of a bigger move because of Mr. Powell and his team, and yes, and of course the data that's coming out on Thursday. So again, I'm not saying that Wednesday does not matter, no, but just like I said, given that when we're evaluating the data sets, we're trying to see which one has maybe could have more effect, and at the moment I'm seeing more effect on possibly on Thursday. So yes, we'll see how that's going to play out, of course. But look, at the moment, from the technical perspective, I would say as long as we remain above the 200-day EMA, then yes, I will continue targeting the upside. In order for me to move towards some lower levels, then a drop below the 33,776 territory would be required. Yeah, just quickly, I forgot again. Good morning, everyone in the chat room. Good morning, everyone who's tuning in right now. I hope you're having a wonderful start of Wednesday. So yes, I mean, that's the simplistic approach here on the Dow. I mean, I'm not going to really invent anything else. I'm just going to stick to that. And yeah, for now, I think it's okay. Of course, we're watching the whole kind of earnings season at the moment as well. So that's something to keep an eye on. Today, by the way, let me just double check. Yes, today we do have quite some of the big boys delivering. Yep, Procter & Gamble, Netflix, Morgan Stanley, US Bancorp, and of course, Tesla. So Tesla is going to be monitored very carefully, especially when it comes to NASDAQ, but I'll get to that in a bit. So S&P 500, similar story. We're kind of stuck here, and look, I'm not going to spend too much time. Yesterday, we drifted lower. We fell below that 4,373 territory, the one that I spoke about, but we failed to stay below it, so that doesn't really count much. So that's why I need to see a good drop below this hurdle. I need to see the body of the daily candle staying below it in order to go lower towards that 200-day EMA. In terms of the upside, I need to see a push above this territory, this 4,430, 35 zone, somewhere around there, in order to consider a larger kind of correction to the upside. NASDAQ 100, similar story-ish, because look, I talked about this little hurdle, this 15,000 mark, and I said to you that if we do drop below it, then yes, more sellers could join in. In terms of the upside, I need to see a push above that 15,223 territory. I got that. We stayed above it, and we're kind of still hovering around it. So in a way, I can say that maybe that is still valid. So maybe, we could see some more action to the upside. And given that we yesterday created that big wick, big tail here, it seems like the bulls are not giving up. So yes, do not underestimate the bulls for now. Yeah, so unless they give up and we see a big slide here, I need to see a drop below this territory first in order to go somewhere lower. DAX, the German index. Looking at the picture here, I mean, it's a bit of a mess, I would say. So in that case, whenever it's a mess, we need to take a bit of a cautious approach. So look, my upside scenario is still from around here, from around this 15,600. If we do pop above it, then yes, I will go a little bit higher. This upside line no longer needed. I think that it needs to go. My downside scenario is from around here. That's it. So in a way, not much to say here, but just kind of, I know we're missing out on a lot of territory onto the upside here, but to be honest, I mean, I'm very careful here because this has been correcting higher right now, but maybe we have ourselves a bearish flag. We have ourselves a pole, and we have ourselves this little correction here to the upside. So bearish flag-ish, yes, bearish flag-ish. But again, to be kind of a little bit more happy about this scenario, I would like to see a drop somewhere below this 15,234 territory, and then we could take it from there. My upside scenario, okay, look, okay, I can say that we can start looking at some higher levels from around this 200-day EMA, which, okay, could be still good, could be a good option, but probably I'll get more comfortable with the 15,600 zone. But, okay, of course, I'm not excluding the 200-day EMA. This might play out, but again, be very careful near the 15,600 then as well. FTSE 100, so we're pushing nicely to the upside, and look, we got some numbers from Britain. Yeah, from Britain this week. Where's that? Tuesday, Wednesday. Yes, we got some CPI numbers from Britain, and there we go. It came out higher than the forecast, but not higher than the previous, just exactly like the previous. And I'm talking about the headline year-on-year CPI. So the core one, what's happening with the core one? It came out higher than the year-on-year one, came out higher than the forecast, but slightly, just 0.1% lower than the previous. And okay, look, in general, that should be seen as a bad thing for the stock market. But I think that at the moment, the other drivers are that the PPIs have remained quite well. The PPI output, inputs, okay, the input month on month did drop a little bit, but the year-on-year dropped as well. But in general, the output remained higher. So look, I think that you need to give some time for the market to digest this news, and I think that then something will start happening. At the moment, we're seeing some positivity, but do not be surprised if, let's say, suddenly we reverse back down here, just because, like I said, the inflation is not dropping, and if inflation is not dropping, that means that interest rates might not be dropping too, and that means that this could apply pressure on the stock market. However, the FTSE is a little bit of a different story here, I would say, because again, a lot of companies in there are making their money outside of UK, so maybe that's why there's not much of negativity right now on this one. But okay. Look, for now, let's put it this way. I'll stick to my technicals, and as long as we remain above that 7,700 zone, yes, I'll aim to the upside. I'll target that 7,800 zone, and then we'll just take it from there. For the downside, I need to see a drop below the 7,639 zone, and then we could take it from there. US dollar. So US dollar, we are still correcting lower, but look, we are still above my 105.75 territory. I spoke about that level, and I said in the short run, if we do drop below this, then yes, I'll lean towards the 23.6. That's my simplistic approach here on the US dollar. So far, it's kind of okay because, look, we have ourselves this 105.75. If we rebound from it, then yes, I'll go higher, but if we fail, look, I don't want to kind of, like I said, create any difficulties here or something like that, because I don't want to complicate our lives. They're already complicated enough. So I think, look, just keep an eye on the economic calendar today. We do have like I said, some US numbers coming out. So yeah, and some speakers as well from the Fed. Some, not Jerome, but some other ones. So just keep that in mind. But that's later on in the day after the European close. But yeah, at the moment, I think that the only approach I can take is this: that as long as we remain above the 105.75, there is a chance for the push higher. But if we start falling below it, I'll lean towards the 23.6. Gold. This one is on fire. Honestly, this is just so okay. This is where I need to say one thing, that initially I said to you that, look, maybe we could see a bit of a retracement to the downside if we fall below all of my EMAs and this downside resistance line. And we do have this hurdle here, this 1900 zone, which has been seen as a good area of support. But there we go. We found this scenario worked out. And this is what I talked about. I said to you, as long as we remain above this downside line, we could see, this one acting as a nice trampoline here, and there we go. It acted as one, and we rebounded and pushed higher. So, and this idea, which I keep on saying, that whenever we break a trend line, we tend to revisit it from the other side, and I think this is one. And no, we revisit it, we test it, and then we rebound and push back up. So, in this is a clear, perfect example of that. There we go. And yeah, so yesterday I said that if we do pop above the 1920 territory, I'll go for some upside. There we go. Boom. Fantastic move. We reached the 1943 zone, something like that here. Almost. Yeah. And yes, we continue to trade above the 1930 zone. So as long as we remain above that area, I will continue targeting the upside. So no more Fibonacci for now. But yes, look, if you're looking for some downside, okay, this 1920 has to go, no longer needed. If you're looking for some downside, I think maybe it's good to draw something else here, and we can draw this steep upside support line. So if we break the steep upside support line, guys, and we fall below the 1914 zone somewhere around here, then yes, this is from where I will consider a move lower. Okay. For now, like I said, yes, for now I'm targeting the upside. My next target is around here first, this 1947 and then 1953. So I'm only targeting these two levels for now, or the area between them. That's going to be my target. Daredevil Dave, good morning. Can see you there in the chat room. Good morning to you too. Good morning. Yes, I hope you're having a wonderful start of Wednesday. So, jumping into silver, just a quick update on silver. Fantastic hold up here near the 200-day EMA. So far, so good. And look, if you want to see some higher levels, you still could have those. You know, you can still see those. But I think that, yes, I'm going to be keeping an eye on these levels first, the 23.56 and the 23.77. And then we'll just kind of take it from there. In terms of the downside, I would need to see, right, okay, now something has to go here. I think that some of these adjustments have to be made. Right, this is no longer needed. I need this one right here. And this needs to go as well. That will mark the inside swing high here. Okay, let me just double check something here very quickly. So yeah, there we go. That's probably a little bit better. Look, for now, as long as we remain above the steep upside support line, I will go higher, and especially if we also, you know, move nicely above the 200-day EMA. If we do that, great. I will go towards my 23.56 territory or this 23.77, and then we'll just kind of take it from there. For the downside, I need to see a drop below the 23.37 in order to consider some lower levels. And for now, maybe, you know, consider this needs to go, I think. Yes, I mean, maybe we could keep an eye on this little level first, this 22.22. So yes, this is my downside scenario at the moment. I know we could be missing out on a bit of territory here, but I'd rather stay safe than sorry. Oil. Oil is trying to grind higher, and this is where my rising veg pattern is not working. So, okay, that's fine. I mean, let's get rid of the upper side here. Maybe it's a rising channel, who knows? But at this point, I think that yes, the upper this scenario where I said that if we do pop above this 88 zone or 88.40, that might work out better. And yes, so far so good. I think that this is where it's moving nicely to the upside, and for now I would like to see a move towards this 95 zone in general, but of course let's keep it short and simple. First, as long as we continue to trade above that 88 zone, my next target is the psychological 90 territory together with this 90.36, and if that gets cleared, then yes, I'll go further north. Copper, oh, by the way, in terms of downside scenario here, like I said, if it falls back below the 88 zone and stays below it, then yes, I'll consider a bit of a retracement here to the downside. Copper pushed above the 3.60 zone, and yes, my next target now is this downside resistance line drawn from the high of the 1st of September, and 3.60 territory is something that I'm keeping a close eye on, because I said to you that if we do pop above it, I'll consider a larger correction to the upside towards my downside resistance line drawn from the high of the 1st of September. In terms of the downside, I need to see a drop below the 3.54 territory right here, and then we could just take it from there. And then, yeah, we could go a little bit lower. Bitcoin Cash, so there we go. We're trying to pop higher, but we are staying right now above this 28,550 zone. And yes, at the moment, I would say this way, that as long as we remain above this territory, above that 550, then yes, I will continue targeting the upsides. Simply as that. Of course, as you know, this week's madness, when we saw this one exploding from 27 to like all the way to 3,600, something like that. Yes, that was fueled by a false tweet. Yes, on false message from Cointelegraph, saying that they basically SEC approved the Bitcoin ETF, but that was false news, and there we go. They had to then go and apologize for what they said. Okay, I mean you can read all about it on in the website, on their website. So that's quite interesting. I mean, they're quite a detailed explanation, but okay, things happen. Get it, but somebody made some good money on this one. Look, for now, I would say this way, that as long as we remain above the 28,550 zone, then yes, I'll continue targeting the upside. My next target will be actually around here, this 29,685 first. Then, of course, I'll be keeping a close eye on that psychological 30,000 mark, and then maybe higher. For the downside, I need to see a move back below this 28,150 territory, and then we could target this upside support line drawn from the low, the 11th of September. Ethereum is a mess. Let me just remove everything here because to be honest, we need to. Look, for now, what can I do here is, first of all, I'm going to mark this this week's high near the 1641-42 zone, and I'm going to mark the current lowest point of October. So these are my levels that I'm going to be keeping a close eye on, and in order for me to, let's say, consider the upside, a push above that current highest point of this week is required. In order to consider the downside, a drop below the current lowest point of October is needed. While we remain in here, I'm not really touching it, and I'm not doing anything with it because this I don't like. Let me just draw something else here very quickly. I have this downside line, which is also in a way could play out nicely, but okay, that's for something for later on. If we do pop above the 1641-42 zone right here. Litecoin very quickly on that one. So this one's still, look, this one's a little bit of a mess. Let me just actually get rid of everything. I think not everything is working now, so I need to start fresh. Now, what I'm seeing here is actually not something very bullish. So if this is something of a range here, then there is a good likelihood that a big likelihood that we could see a drift to the downside. Why? Because the prevailing trend was to the downside here, and we started moving sideways here. So now, in a way, there is, according to all the TA rules, the idea here is for we could see a breakout to the downside. But the problem for me is that this has been kind of, already violated. So maybe it's actually not that going to be, it's not going to be by the textbook, actually. Maybe something else is shaping up here. Okay, look, if it's not a range, maybe it's a triangle pattern where, it's kind of doing something like this here. So if we do consider this triangle, this is as if this is a triangle, then in a way also the same analysis could be applied, and the same theory could be applied, that the prevailing trend before entering this triangle was to the downside, so the breakout to the downside is more likely. So look, I'm not saying that this is going to happen. We need the confirmation break first. So let's put it this way. Once we clear one of the sides of my triangle pattern here and stay either above or below one of the sides here of this triangle, then yes, I will consider the next short-term directional move. Let's jump into Forex. Let me just have a sip of tea, because my throat is going down for some reason. Okay. Look, AUD/USD. I think I'll just a little bit make my voice calmer and lower down the tone. So AUD/USD, we're getting closer to this downside line. So I said to you before that in order for me to go higher, I need to break this downside line. So while we remain in here, I'm just going to observe the price action, but once we start breaking this downside line, yes, I'll go a little bit higher, initially aiming for my 100-day EMA, and then I'll just take it from there. For the downside, a drop below the 0.6285 territory would be ideal, and all this area right here is something that I'm going to be just observing and not really doing anything with it. This needs to go. Yep, there we go. Something like that. So, yeah, like I said, I will give it a room some for maneuverability, but like I said, I'm waiting for a clearance of one of these levels, of one of these lines for me, in order to consider the next short-term directional move. AUD NZD, and there we go. We pushed nicely to the upside. Look, oh, by the way, in terms of Australian data. I think tomorrow is an interesting one. Yes, tomorrow we have employment change figures, full employment change, yep, participation rate, unemployment rate, all coming out from Australia. So keep that in mind, guys. We could see some action in AUD, US, or in general in AUD against some of its major counterparts. At the moment, everything is looking quite nice here with this pair. So far, so good. The mission, I think, mission accomplished in a way on this one. We reached my targets here, so 1.0815 together with this 200 EMA. Maybe not as exact level hit here, but in general, good result. So look, I would say this way. At the moment, yes, I'm still leaning towards the upside, but maybe it would be nice to see some correction to the downside first and then kind of rebound and push back up. But I think that I'll consider that correction only if we do drop back below the 1.0777 or 78 zone, somewhere around here. Because at the moment, I have to still aim higher and aim to the upside. But for that, in order for me to get comfortable with that idea, I need to see a push above the 200-day EMA. USD JPY. So look, there's not much happening. Still the same thing. I'm still stuck here. In order for me to go higher, 150.16 territory is required here. A break of it is required in order to go higher. So yeah, I'm just kind of, everybody's just waiting for the BOJ, I think, on this one, because the dollar is not, at the moment, is not the strongest one, but the Japanese yen is also not the strongest one, you know, and yes, it's still, everybody's still holding on here. Look, I'll repeat myself for the downside. I need to see a break of this upside line, and I need to see not only just a false breakout, but also like you know, the pair staying below it, the body of the daily candle staying below it in order to go lower. But at this point, something is forming like an ascending triangle pattern. According to all the TA rules, such patterns tend to break to the upside, but a confirmation break is still required. So let me just grab a rectangle here to highlight this territory. This is going to be my upside scenario. Lazar Kalin, hello, good morning to you too. Happy to see you here. Thank you very much for tuning in. Hope you're also having a wonderful start of Wednesday. Look, USD CAD, still the same game plan. I've talked about this 1.3695, still providing good resistance yesterday. Yes, you can see that it tried to go higher. It did give us a false little breakout, but failed to stay above it and drifted back down. So yeah, for now, I would say keeping a close eye on that one, and I need to see a clearance of this territory in order to go higher. For the this level is just in the way a little bit, need to get rid of it. And for the downside, I need to see a drop below the 1.3575 territory right here in order to go lower. USD CHF. USD CHF is yeah, it's drifting nicely to the downside. A drop. Look, I think it's working out perfectly because I talked about this. I said to you that if we do drop and stay below this upside line, below this 0.8998 or in general that psychological 0.90 territory, then yes, I will go further south. I will aim for the 100-day EMA, and if that gets cleared, my next target is the 0.8907, and then we will just kind of take it from there. In order for me to consider some higher levels, I think that a push above the this upside support line would be required, and if we do push back above this upside support line, I will consider some higher levels. Also, we can actually draw this. We can reuse that downside line and make it another one here. So basically, if you see, if we can break this, we can break back above this downside line, then yes, great, more buyers could join in. So at the moment, I'm leaning towards the downside, but my next target is the 100-day EMA because I want to be very on the careful side. And if that gets cleared, then yes, further downside could be possible. GBP Aussie, there we go. So far, so good. We cleared my lower side of the rising wedge, and yes, everything's working out perfectly according to the TA rules. Look, for now, I'm targeting this 1.9248. If that gets cleared, my next target is the 200-day EMA. In terms of the upside, well, this is where I need to get rid of the upper side of the rising wedge, no longer needed. And I think that for me, the upside scenario could come on a pop above the current highest point of October, near the 1.9328. And this is where I'm redrawing the chart a little bit. And then, of course, then yes, we could start aiming for some higher levels. And my next target would be this 1.9479 zone, and then we'll just kind of take it from there. Maybe this one, maybe actually this territory around here somewhere with this 95 zone actually looks a little bit more attractive. So I think that we could actually target that one instead. GBP USD very quickly. So yes, this one's a mess. We're kind of oscillating around this highlighted zone, and to be honest, I don't like it anymore. I need to redraw this chart and I need to remove stuff. So let's do that. You know what? Actually, let's have a fresh look. I think that this is much better. You need to do that sometimes. It's, you know, it gives you a better perspective. You kind of start, you know, removing all the noise here. Now, first of all, I want to bring back, of course, this downside resistance line drawn from the high of the 18th of July. If we do push above the 1.2337 territory right here, then yes, more buyers could join in. If like something like, you know, something like this, if we do break this downside line as well, then yes, more buyers could join in, but probably even more of them could come in because if we do pop above this 1.2337. So in a way, if you're looking for some higher levels, I think that you could start off examining the upside scenario from after a break of this downside line, and not only a false breakout. We need to see the body of the daily candle staying above that downside line. In terms of the downside, I will pick up on this little hurdle, this 1.21, 22, 23 zone, something like that. If we do clear it, then I'll aim for the current lowest point of October near the 1.2037. And if that gets cleared, then yes, further declines are possible like that. So, yeah, that's my game plan for now for this one. So let's see how this is gonna play out. Euro CHF. So looking at the picture here, I would say at the moment, we are keeping a close eye here on this this barrier, and so far this idea is working out. So I said to you that I'm keeping an eye on the 0.9525 territory. If it continues to provide resistance, then we could see that, you know, move lower. And in general, this whole formation here, we have our pole, we have our little correction back up, so maybe it looked like a nice kind of bearish flag here. But hey, look, let's not rush into things. Maybe, you know, it will actually eventually pop above this downside line and go higher. So, you know, at this point, I'm leaning towards the downside, yes, as long as we remain below the 0.9525. But if we start pushing above it, then I'll get a little bit more cautious. Because if we pop above this downside line and stay above it, then yes, I'll consider a move higher. Euro JPY, we're getting closer to the upper side of the range here. Maybe this is the moment where we can have that pop. Look, we do get some data from Eurozone, so that's coming out today, by the way. We get some inflation numbers, so that's going to be very interesting to see what's going to happen here. I mean, will we get that pop or not? And yeah, for now, I'm kind of leaning a little bit more towards the upside. However, I cannot really get comfortable with that idea because we are still knocking on the door of the upper side of the range here, so we need to see, you know, an exit, and if we get that, great, more buyers could join in. But if we don't, if it just keeps on teasing us, then that's no good. You know, maybe we could see a drift back down again. And finally, Euro USD. So this is what I talked about. And look, so far so good. It seems like the bulls are really prepared maybe to jump in here. Okay, look, in general, right now, I'm kind of leaning a little bit more towards the upside because we're breaking my downside line. So in a way, I will actually stick to my game plan, and I'll say that as long as we remain above this downside line, I will continue targeting the upside, and I'll target this 1.0617, 35 levels, or even better, the 23.6. And you know what? Actually, you know what? I'm gonna get rid of this level. I don't want it anymore here. I'm just gonna stick to this. I'm gonna stick to the 23.6% retracement on the Fibonacci together with this 1.0635 level. Good potential target. Look, I will, like I said, I'll stick to that one, and we'll continue targeting the upside. So yeah, that's my game plan on the euro dollar. Let's see today how the news are going to come out. And like I said, at the moment, the inflation numbers are expected to come out lower, much lower than the previous. But this is where my curiosity is killing me, and I'm thinking that if the numbers actually come out higher, and if we judge by the recent activity, and let's say in the pound, in the British, in Britain, that inflation in there came out higher a little bit, just by a little bit. So if Eurozone's inflation comes out a little bit higher than the forecast, I think that, but still below the previous, I think that we could still see some positivity in the euro against some of its major counterparts, just because the forecasts are way too on the low side, I think, way too far from the previous figures. So yeah, that's going to be interesting to see. Like I said, maybe, like I said, it comes out higher a little bit and the market takes that as a positive. Let's see. Let's see how that's going to play out. So, guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, your views, your rocket ships, your comments, everything, guys. I really do. So, I hope you found it useful. And as always, I wish you, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. Thank you very much, and I'll see you tomorrow, 6 o'clock GMT time. Thank you very much, and bye-bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.